All right, but you know this. All right, okay.
Yeah, we'll exchange in regard to the reports. Okay, we'll vote first, and then you will come after.
Okay.
Okay, thanks, commissioners. I think we are ready now.
Honorable Karim, what are you saying we're doing? We are voting, and then after voting?
Well, it's normal procedure as the Money Bills Act. Normally, the NCOP committee doesn't adopt a strat plan and APP, remember? But because of COVID-19 circumstances, the powers that be have decided that we should have a joint meeting. But we don't normally do this. We don't have a debate in the House either. So really, ours is the same report as the NA. The only difference is that we put select committee rather than standing committee. And of course, we don't have these quarterly meetings. The NA does that. Okay, thanks.
Start. Oh.
What happened to the chairs of the mighty finance committee?
No, I'm here. The NA has to chair because we don't do strat plans and APPs normally, as you know.
Just a second, Noxie.
Okay, Chair.
And remember, Noxie, when the chair is not there, you're supposed to chair, as far as I know.
That's
so
what
don't
I'm scared.
speak, please.
That's what I want. I want to rule out because today the chairs are both here and they are both
No.
here.
We have distinct roles, please. Don't conflate.
Yeah. Dix,
Leave Dixon out, please.
I want
Hey,
you to
I'm here.
intervene because this is a man's
what?
thing.
It's a mess.
Men's
It's a man's thing.
and you must not allow them, eh? This men's supposed to
Yeah.
write.
Yeah.
Yeah. They must share.
Signor and Signorita, ladies and gentlemen,
Hi, Sani Masangani.
manene le manenekazi. Good morning.
Hey,
Dameseniere. Can
I
us
Morning.
saw
Morning.
your interview.
Good morning.
Morning. Can us begin met de vergadering?
En ook hoe
Plezier.
Ja.
Plezier,
Oké.
voorzitter. Plezier.
So
Okay,
vandaag ons praat.
vandaag
Frans.
ons praat Afrikaans. No, nee, geen Engels.
Vandaag is vandaag.
The meeting will start in Shakan. Okay, today Afrikaans throughout. Oh yeah,
Yeah.
next week Shangal, that other week is Tswana, that other August is Xhosa, and then beginning of September is Ndebele. So today was Front Africa. Danke, Damisen here. Oh yeah, and that John this Shangan, and that John Shangan don't. Okay.
When we speak vendor.
Yeah, the vendor will come in the first week of October. Okay, thanks very much, honorable members. The meeting is officially open, and you are all welcome. We welcome everybody, honorable members, staff of parliament, media, and participants, and all participants. Apologies, Kululeko, are there apologies?
Chair, it's Alan from the Select Committee side. I'm not sure Nkuleke's got connectivity issues, so I'm not sure if they have any apologies but from Standing Finance, there's no apologies.
Yes, I'm back, Alan. From our side, there are no apologies, Chair.
Okay, thanks. You are welcome, and also welcome Honorable Karim, Chairperson, Select Committee, Honorable Matlangwe, and other chairpersons present here. Let's move to the second item, consideration and adoption of the committee report on the National Treasury Strategic Plan 2020-25 and Annual Performance Plan 2020-21. Alan and Nkululeko, can you project the report on the screen so that we can go through item per item, instead of item per item, slide per slide? Okay. That's the introduction. This one, can you pick it up so that we can see 1.1 and 1.2? Okay. There it is, 1.1 and 1.2, if ever there are issues that maybe, and if people have gone through the reports, I don't think we have to go through 1.1 until 4. We can go straight to observations and recommendations, so that if ever there are issues of corrections, grammar, typographical error, you can forward that to the Secretariat, so that we are able to save time. We have got lots of commitments today. Let's go straight to 5. Yeah, there we are. 5.1, observation and recommendations. Where do we go in terms of those who raise hands here? Are there hands from your side, Alan and Kula? Okay.
Chair, thank you very much.
Honorable Jandu?
Yes. Yeah, Chair, I just want to make a point on 5.1. Yes. So to put an emphasis on it, so that in terms of the report, which must be read together with the other with the reports on the budget vote of 8 of 19 May. So I just want to put an emphasis on that, so to know that we read these reports together. Thank you, Chair.
Okay. Thanks, Honorable Jandu. Any comment on 5.3? Uh, 5.4.
I've got Dr. George, Chair, on 5.5.
5.5.
Yes, Chair.
Okay, Dr. George.
Thank you very much, Chairperson. Good morning, colleagues. I'm not going to go through again. We've had a discussion already on the land bank in a previous meeting, so I'm not going to repeat what we've already said about it. If the Treasury is going to then recapitalize the bank, I do think it's very important that this does not happen again, because we certainly don't have enough funds to keep paying over and over again. So I would like to add somewhere in that recommendation. So, for example, it says the committee also recommends that National Treasury also fulfills its oversight responsibilities of the land bank far more effectively. So obviously the implication is that they haven't necessarily been doing that, which I don't necessarily disagree with. But I would also like to add and take steps to hold those responsible for its near failure to account. The point I'm trying to make is that there was clearly a failure in the bank. I mean, we've said this in the committee already. We're saying that we believe that National Treasury must apply more effective oversight, which we certainly can agree to. But what about those people responsible for not maintaining the mandate and for bringing the bank to its current state of near collapse? I do think we have a responsibility, as does the National Treasury, to take the appropriate steps to identify how this happened, and then if there are those who are responsible for that, to hold them to account. So I would like to add at the end of that sentence, more effectively, comma, and take steps to hold those accountable for its near collapse to account. Thank you, Chairperson.
Okay, thanks, Dr. George. That is Dr. George's proposal. Any take on that? Is there any member who want to make a comment?
Yeah, thanks, Chair.
Honorable Abraham.
Yes, Chair. I think I need to agree with Honorable George on this one, because the issue of consequence management has always been an issue that we have dealt with in this committee, so that when we're looking at the last sentence of 5.5, when the committee is briefed in detail on what has happened, we are briefed on what has happened and what is it that has been done to deal with what has happened and the challenges going forward. Thank you, Chair.
Thanks, Honorable Abraham. Any other member who wants to make? Honorable Masango?
I'm support Chairperson. The addition.
Okay, thanks, Honorable Masango. Okay, agreed. 5.6. 5.7. Okay. Can somebody from the side of the standing committee, the lower house, move for the adoption of?
Chairperson, if I may,
Okay.
I did make a note on the chat that I wanted to propose a further recommendation. You know, we seem to be mostly in agreement here. In fact, we are up to here. I wanted to raise also the issue that I've raised before that we discussed in a previous meeting, which I also don't want to go through again, but it is the issue of pension funds. Now, we have raised before various issues. Firstly, we raised the issue that there was a move towards encouraging funds to invest more in infrastructure, which is a separate issue. I mean, that's a Regulation 28 matter, and that will obviously be discussed at some future point. But I think the very important point I feel that I made in the previous meeting, and I'd like to make it now, as we discuss the Treasury's strategic objectives, is that there is this issue that is still around regarding how does Treasury give some relief to individual members who are members of pension funds. So as I've said before, is that without eroding the base of pensions. So for example, without withdrawing from pensions, members would be able to leverage the assets in the fund by, for example, having a wider opportunity to take a loan, for example, so wider than a housing loan from their pension fund. And this definitely is something that the public are very interested in having a look at, because they are feeling the pinch now in these times. So as I said, I have made some proposals which I won't go through now, but what I would like us to agree, if we can, is that if we request or recommend that the Treasury look into this, because it is important, and my understanding that they are in fact looking into it as part of the ongoing pension reform. So I would like to propose an additional recommendation that National Treasury considers how pension fund members can leverage their pension assets without eroding their provision for retirement. I'm not saying that they must do it. I'm just saying that they should apply their mind to it, because there are ways to do it. And I think we would be amiss if we didn't consider it. So that would be a proposal of mine that I would like to include, that the Treasury needs to look at that aspect. Thank you, Chair.
Okay, thanks, Dr. George. Honorable members, that's the proposal from Dr. George. Any comment on that? Do you have comments?
Just clarity, Chair. Is a
Honorable.
Okay, thank you, Chair. Just wanted to check whether the honorable member is still going to draft the recommendation and give it to the secretariat, or is it ready for him to post so that we can consider? Just clarity.
Dr. George, is your recommendation?
Yes, Chairperson. I'm actually typing into the chat box as we speak. It's a very short sentence and I'm nearly there. So I will just type it into the chat box and then we can look at it.
Okay.
I'm nearly there.
Sangu? I don't know what is happening today with Dr. George. He seemed to come with tempting inputs today. I think he woke on the right side of the bed. But then what I like he's saying is that he's saying we are not saying it should be done. We say they must consider the possibility of it, and we know from the previous term that there has been such suggestions and requests that the parliament must look into that. I'm talking about members this time, but also I don't know if it might help in terms of the GEPF, the rate at which the public servants are resigning in order to access their pension fund and reapply again. Because they are too indebted. But I'm tempted to agree to this, but like Honorable Abrams, I'm just having some questions.
Okay.
Chairperson, if I may comment on that, I would absolutely agree that there is concern that members are in fact withdrawing from their pension funds in quite big numbers, it seems, because they want to access their retirement assets because they've got no other option. For example, their spouses are losing their jobs or family circumstances are such that there is very big difficulty. And we all agree that that's not a great idea because then people have to pay tax, which is punitive, and what's going to happen when they get to retirement. So what I have given a lot of thought to, and I do think it's something that can be sensibly done, is to say, well, people have got money that is in a pension fund, for example, even the GEPF, for example. At the moment, they're able to take a housing loan, which they then have to pay back over time. What I'm proposing is that, and it's just a suggestion, but the Treasury is obviously smarter than I am and they can think about it, is that there is no reason why you couldn't expand the definition, for example, of a loan, enable members of the GPF and other funds to take a loan against their pension via a bank, but at the same time, the money would remain invested. So they wouldn't have to disinvest at the lowest part of the market. And also, they would then have time to repay the loan. And perhaps we could even make an agreement with various financial institutions to make the loan softer. So, for example, give people a longer period to pay or lower interest rates or defer the payment or something. There are many ways financially it can be done. So all I'm saying is that let's consider it because finance is such that there are many ways to develop instruments. So that's all I'm proposing, that we should look at it because we would not be doing a service. We would be doing a disservice to members of all funds if we don't do it because we're giving them no option now other than to, if they desperately need to have some kind of relief, leveraging off their own asset, we're forcing them to retire, or to withdraw from the fund, which is not good. That's all really. Thanks, Chair.
Thanks, Dr. George. If I remember, the issue of Regulation 28, which has to do with the GPF and the PIC, was one of the resolutions that we took last week, and we presented it to the National Assembly when we were debating the framework, and the report of the committee was adopted by the National Assembly. Subsequent to that, what should happen is that the Treasury should come to the committee and brief us about the resolutions that we have taken last week. Because now these resolutions that we are talking about that have to do with PIC, Reserve Bank, GPF, and other prescribed assets are the resolutions of Parliament. And I hope Treasury are here. So at some stage, Secretariat will request Treasury to come and brief us about GPF, including invoking Regulation 28 and issues that are raised by Dr. George, so that we don't go into details. I think when you write to Treasury Secretariat, you will indicate issues that members are requesting Treasury to include in the briefing. So I think it will cover the issue that is being raised by Dr. George. Unless there's somebody from Treasury who's here who will want to make a comment in this regard before we finally adopt the report, so that they assist us in the matter that is under discussion. Anybody from Treasury who will want to make a comment in this regard on Regulation 28 and the issues raised by Dr. George?
Chair, I think we note what the committee has said. Sorry, it's Momo here from Treasury. We note what's been said, as you said in the report last week, and the points that is made. And, you know, we will be looking into all these suggestions and come back to the committee.
Okay. Thanks, Honorable Momoniat. So that's that, honorable members. The matter will be taken care of when the Treasury comes to committee to brief us about our resolutions. Anyone to move for the adoption of the report from the lower house of lower house is the House of Commons.
Chairperson.
I doubt it's us, those. It should be the other house. That's a lower house.
The other house is the House of Lords. It's the upper house. We are the lower. Honorable Abraham, can you move for the adoption?
Yes, I so move, Chair. Thank you. I move that we adopt the report with amendments, Chair.
Okay, thanks very much. Mover, Honorable Abraham. Seconder?
I second Dorothy.
Chairperson.
Honorable Mabile, you are seconding?
Yes.
Okay. Dr. George?
Yes.
Any objection?
I'm not objecting, but as per is a usual, our position is that we reserve our position because obviously there needs to be a discussion on it. But I just want to note that. Thanks, Chair.
And then Chairperson, the EFF votes against.
Okay, your EFF is objecting. Okay. Alan, what are the numbers like? Can you assist from your side?
Chair, at last count, we had 2, 4, 6, 7, 8, 9, 10 members, so we're sufficiently covered for quorum, Chair.
We have the quorum. Those who vote for, are they in the majority or in the minority, or what's the number like? In terms of the ANC, how many are they? EFF, how many are they? TA?
ANC 7, DA 2, EFF 1, and Freedom Front plus 1.
One for.
Okay. No, thanks. Let's move to the next item. Briefing by National Treasury on the disaster management bill and disaster management.
Sorry, Chair, Alan, yeah, the select committee must also go through the process of voting and.
Okay, no. Hey, you know, this new system, we have to get used to it. Chairperson, Honorable Karim.
Yeah, Comrade Chair, we are still trying to connect with Zolani. So can we defer the voting until after consideration of the tax bills, please? Thank you.
Thank you. I support.
Okay. Thanks. No, can't you Puma where there's no connectivity?
Hi.
Huh?
He's up in the mountains.
Don't
You,
disclose.
He's up in the mountains.
it's a gift. Manjandu. We must get Wi-Fi for him there. Oh,
Yeah.
and before I forgot, honorable members, I'm very sorry. Inkosi Buthelezi called me over the weekend. He's not well, but he's recovering. He has been admitted at a hospital in Richards Bay. Sorry for making you aware when we're dealing with apologies. He's recovering, and we wish him a speedy recovery as a committee. Next item, briefing by National Treasury on the Disaster Management Tax Relief Bill and Disaster Management Tax Administration Bill. Is Momo, is the Deputy Minister here, or who's going to take us through the bill? Or the DG, is he here? Who's leading from the Treasury?
But the DG was here, I think, earlier. I'm not sure. But I'm leading on this item.
Is it Momo? I can't see you. Who's speaking?
Okay, just one sec.
You're supposed to be on TV. The TV says they want to see the visuals.
Yes, I'm trying to. Can you see me now?
I see half of your face. Unless Alan and Kule, can you see Momo properly from your side for the sake of the medium? Because they have to get the visuals.
There are slides on the screen, Chair.
Yes, but
Yes, Chair, I don't see that.
there is a slide up, but there is a photo of Mr. Muniat. I can see him. He has put on the spectacles now.
Yes.
Okay.
Yes.
Yeah. Okay. No. Okay. Thanks very much, Comrade Momo. Can you go through the briefing?
Okay. Thank you, Chair. Chair, if you let me start off just by saying that we have presented before. I think it was in April on these slides. If you can just run the next slide, please, Ellen. And what we did was just provide this overview. Today we'll provide a bit more detail and an update since that, because like all tax bills, we published them in draft form. And after the president made his two announcements on the national state of what we have today is the actual bills after they've been tabled for the committee to consider and for Parliament to consider. So if we just recall what the two bills do, and like with all tax bills, and Chair, sorry, I should say that what we've done is all the tax measures that we've taken because of COVID, not 100%, but most of it is left to this COVID tax bills. And like all tax bills, they are split into a money bill, and the admin issues are in a Section 75 non-money bill. What we will also be doing later this month is, as we do every July, we publish the tax laws amendment bills and the tax administration law amendment bills, and we'll hope to come to Parliament to present on them when Parliament reconvenes. And then I guess the two processes will move together to some extent for the process to adopt. So these are the two bills that we have following the pandemic, and we've, as I said, we've put these out for comment, and we've got comments as well, and we've just updated these bills slightly. But I'm going to ask Yanga and Chris to come in they are here with me. I don't know who's here from, whether France is here or Katinga is here from SARS. They'll also focus on the admin bill. Yanga, do you want to start? Chair, can Yanga start?
Okay. Thank you, Momo. Good day, honorable members. Good day, chair of both committees. As Momo has said, on the 23rd of April, we did an informal briefing on the tax proposals, but by that time we had already prepared the bills. And after that, we published the bills for public comment, and we published the bill for public comment on 3 occasions, on 1 April 2020, 1 May 2020, and 19 May 2020.
Hello, Young.
Hello?
Yeah. Can we have the visuals for our YouTube and the media? We also want to see the pictures, because the television, either they are live or they will broadcast later. But they've requested that when we speak, we must have our faces on the screen.
It's live.
Oh.
Okay. So, Alan, if you can turn, I've tried to put my video, but my computer is so old, I don't know whether it will work. Alan, if you can turn to the next slide, slide 5. On slide 5, that's where we show the number of comments we received on the bills. Like on the first round of comments, when we published the bill for the first time on the 1st of April 2020, we received 94 comments. 1st of May 2020, we received 76 comments. And 19th of May 2020, we received 16 comments. And we revised the bill before we took them to the State Law Advisor for certification and before introduction by the Minister on Parliament. All the bills were revised to take into account the comments received. Momo, do you want to continue, or must I continue, like, regarding the changes that are in the tax bills?
You continue, Yanga. Yanga, continue.
As Momo has said, the bills are divided into 2 based on the constitutional requirements. We've got the Disaster Management Tax Relief Bill and the Disaster Management Tax Relief Administration Bill. And on the Disaster Management Tax Relief Bill, the proposals that are included in the bills are on that bill are the following: expansion of employment tax incentive age eligibility criteria and amount claimable, streamlining the tax dispensation for funds established to assist with COVID-19 disaster relief efforts, skills development levy holiday, increasing the deduction available for donation to the Solidarity Fund, and adjusting employees' tax for donation made through the employers. We're gonna share the presentation between myself and Chris. So Chris will start on the employment tax incentives and I will continue thereafter.
Thanks, Yanga. Good morning, honorable members, chairs. The first intervention that we did was a large expansion of the employment tax incentive. This was really for us to try and move as quickly as possible to incentivize firms to keep their lower income employees on the payroll. The lockdown was initiated at the end of March, and we got this implemented by the 1st of April. The idea was to try and provide an additional amount that could be provided to companies through the existing employment tax incentive framework if they kept those employees on their payroll. The amount is an additional 750 Rand per month for all individuals who were originally part of the employment tax incentive, i.e. between the ages of 18 to 29 and were part of the qualifying income criteria, as well as those for above. So it really was a big expansion to those employees who are also above the age of 30. So for all employees from the age of 30 to 65, as long as they earned below 6,500 Rand per month, they could qualify for this additional amount. And this was to come in for 4 months, April, May, June, and then finish at the end of July to provide some assistance both to firms and to employees. The second part of the proposal was to accelerate the payment of the ETI refunds that these employees could get. The way the employment tax incentive works is that the company can reduce the amount of pay as you earn that they pay over to SARS in order to then keep that additional benefit. But for companies and businesses that don't have a very large amount of pay as you earn, they then have to wait for a refund from SARS. We accelerated that from twice a year to monthly so that firms would be able to get cash into their hands as soon as possible. It was restricted obviously only to tax compliance employers and also only to employers that had previously registered with SARS before 1 March of 2022 to help with compliance issues, to make sure that we didn't have a deadweight loss of reducing revenue for those who try and game the system. I think that's everything. Thanks, Younger.
Okay, thanks, Chris. Another proposal that is included in the tax bills, that is the money bill. It is the special tax dispensation for funds established for COVID-19 disaster relief efforts. As you are aware, there were funds that were established for COVID-19 disaster relief efforts. So the special tax dispensation is given only for the period of 4 months. So what happens is that these funds will have to apply to SARS to gain the public benefit organization status. Once they receive the approval from SARS, these are the tax exemptions that will apply to them, in that the COVID-19 disaster relief funds will be exempt from income tax. Donations made to or by the COVID-19 disaster relief funds will be exempt from donations tax. And then donation made to COVID-19 funds will qualify for a 10% tax deductible donations in terms of Section 18 Cap A. And then there was another special measure whereby we were advised that these disaster relief funds will make loans to the small business employers, but those loans will be used to pay salaries of those employees. So the measure that we have introduced here is that if a loan has been made to the small business employer, but that loan is used to pay the salaries of employees and is paid directly to those employees, that loan will be exempt, that amount will be exempt from withholding tax, PAYE withholding, because the disaster relief fund is not going to be regarded as an employee in this regard. After 4 months, this special dispensation will cease to apply. What we have said in the bill is that after 4 months, because those funds will still be there, they'll have to go to SARS and make a new application and see in which provisions of the Income Tax Act will they fall under the exemption. So after 4 months, this dispensation will cease to apply and they will go to SARS to make new application. The next. The next one is increasing the deduction available for donations to the Solidarity Fund. As you are aware that the Solidarity Fund has been formed or established by government. So in this regard, we have made a special dispensation in respect of donations made to the Solidarity Fund to say that instead of the current 10% which is available, the tax deductible donation will be 20% in this regard. The last one is the skills development levy holiday. In this bill, another proposal has been made for a skills development levy holiday for a period of 4 months from 1 May 2020 to 31 August 2020. This means that employers will be exempt, will not be required to pay skills development levy for the period of 4 months. Thank you. I think the next proposals relate to the tax administration bill, and Franz will continue. Thank you.
Thank you, Younger. Good morning, honourable members, chairs. That moves us on to the next set of slides, which deal with the administration bill. And to begin with, we look at the payment of employees tax. Now, generally speaking, the employer would deduct the pay as you earn or employees tax from their employees as the salaries and wages are paid out. And the measure here is to assist in the cash flow for the business. Essentially what happens is they deduct the full amount, but they need only pay 65% over to SARS. So put differently, they can defer 35%. And that runs through from April to July. And then the deferred amounts get paid from the August payroll onwards. So effectively, that means from September onwards, the amounts are then paid back in equal installments. To qualify for this, you need to be a small or medium-sized business. So that's defined as a business with gross income not exceeding 100 million rand. And this is somewhere where we were able to make a move. Initially, that was proposed to be 50 million rand. And after public submissions and further consideration by Treasury, that was increased to 100 million, which is what is on the table now as the proposal. There's a limitation on what we would, in a shorthand way, think of as passive income of 10%. Now, essentially here, passive income would be the income like interest, royalties, rentals, and so forth, which would generally not be considered to be that heavily impacted by business changes. So again, you would need to be tax compliant here, and that means your returns need to be up to date. You shouldn't have outstanding debts and so on. If we move on to the next slide, and this is provisional tax. So here again, we have a similar situation. And by the way, sorry, just one point, the slides have not been updated, but the passive income limitation is 20% now. It was initially 10%, and again, we got public comment on that, and it was increased to 20%. Apologies for that, the slides had not been updated. So with provisional tax, again, a similar concept. Every year, businesses are expected to estimate their income. They make two payments, one 6 months into the year, one at the end of the year, in which they estimate how much their taxable income for the year will be, and then they pay over provisional amounts. So the first payment 6 months into the year is 50%, and at the end of the year, they try and estimate towards 100% of what they need to pay. Here we have a situation where, again, they need only pay over a proportion of that. So for the first payment, it would be 15%, and for the second payment, 65%. You've got the periods there. The idea being that essentially they get a deferral of the 35%, and they only pay that on their what is known as the topping up payment, which is 6 months after year end, generally speaking. So they have a fairly significant deferral of the amount of tax that they would need to pay over. Again, the turnover cap is 100 million, and the passive income may not exceed 20%. And once again, you need to be tax compliant, returns in, and your tax debts up to date. Bear in mind, and that's a point that's made there, you may in fact have a tax debt, but if you've made an arrangement with SARS to pay that off, that is counted as being compliant, which I think is an important point in this context. Moving on to the next slide. We also have the so-called turnover tax for micro businesses, and they would enjoy a similar dispensation with respect to their what are known as interim payments. So individual taxpayers and larger businesses have provisional tax systems. Micro businesses with turnover tax have interim payments, and a very similar philosophy is carried through there, with one exception, because they don't have this third topping up payment. That doesn't become the cutoff for them to pay the balance. They pay the balance when they are finally assessed. It makes life a little simpler for them. Moving on to the next slide. We look at Younger has made the point around donations to the Solidarity Fund. Now, currently, an employer can take into account up to 5% of the employee's salary for purposes of what is known as payroll giving. So if donations are made through the payroll system, the employer can essentially take a donation of up to 5% into account when working out your pay as you earn or employees tax. So that means you can get the deduction and the credit for that through the tax system earlier than if you simply claimed it on your assessment at the end of the year. So given that there was an increase for the Solidarity Fund, of essentially an additional 10% donations there, we have introduced, to match that, an increase in the contributions that can be made and taken into account through the payroll system. That is, again, a cash flow benefit to the employees who would otherwise make the donation up front and then have to claim it as a deduction at the end of the year with their tax return. Moving on, we get to value-added tax. So currently, small businesses with turnovers of under, essentially turnovers, but technically speaking, supplies of less than 30 million rand a year are permitted to file every 2 months. That reduces their compliance costs for them because they don't have to file monthly. And generally speaking, if you're paying into SARS, it gives you a bit of a cash flow benefit. Of course, you may be in the situation where you get a refund. And so what is proposed here and has been implemented is that you are permitted to put in a tax return on a monthly basis if you want to. So instead of a return every 2 months, you would put 2 returns in. Why would you do that? Because you are expecting a refund. So you don't mind the additional administrative cost of 2 returns as opposed to 1. And so that has been done. And the systems were in fact in place to permit the Category A vendors to take advantage of that from May. Moving on to the next slide and the extension of time periods. And again, apologies, there's a typographical error. It's clause 7. So there are certain time periods that are impacted by the national lockdown when people were not permitted to travel. And so as an example, you may have been required to attend an interview at a SARS office in terms of the Tax Administration Act. Clearly that was not possible. So the dispensation has been put in place to essentially not count the days of the lockdown for these kinds of purposes. Important point to bear in mind is it doesn't apply with respect to due dates for returns or payments. For returns, essentially, this is a very important source of information for economic and revenue analysis, so the returns are still required. And as for payments, you have heard about the deferrals that are in place on an automatic basis, and then there are the deferrals that are permissible on request. So if there's a difficulty with tax payments, there is a mechanism in place to handle that. So the days are counted for the purposes of returns and payments. And I think that wraps up these measures. Then there are a number of measures that are not included in the bills and which have been dealt with by regulation. So moving on to the following slide. So you will recall that sales of alcohol and tobacco were not permissible during the lockdown and in fact are still not permissible or are again not permissible. Now, the issue here is that the excise duties on alcohol and tobacco are levied when the goods essentially leave the factory. So when they leave the factory. And what that means is that there is a problem if the goods have left the factory, have gone into storage and then cannot be sold, which was the difficulty that these industries ran into because they had been manufacturing without the anticipation of a lockdown and then found themselves having manufactured and having to pay excise. So essentially what's been gazetted here by way of a rule, because this is simply a deferral of payment, is that the payments to be made in May and June were pushed out by 90 days. And those were effected by rule. Moving on to the next slide. This was the filing and first payment for carbon tax. Again, an administrative issue, so again, effected by way of a rule published by SARS. And so we moved out the first payment from the 31st of July to the 31st of October. Moving on to the next slide. This was an announcement that was made by the President. It was essentially a restatement of the relief that is available in terms of the Tax Administration Act. And similarly, there are rules in place now with respect to the Customs and Excise Act, which permit businesses to make application to SARS for installment arrangements and deferrals. And so this is essentially what people are doing. They're using the existing provisions now to request extensions and installment agreements if they are encountering cash flow difficulties. Which brings us on to the next slide, and I think I'll hand back to my Treasury colleagues for these slides.
Okay, thank you, Franz. In the 2020 budget, we had made announcements regarding some of the tax measures. Those announcements were going to be included in the TLAB, not in the COVID-19 bills. But when we were dealing with the COVID-19 tax measures, we received so many comments from taxpayers asking what is going to happen with these, with some of the proposals that are in the 2020 budget. As a result, the minister made an announcement regarding some of the measures that were in the 2020 budget to clarify and give certainty that these measures are not going to be done in the 2020 legislative cycle, and we're going to postpone the effective date to 1 January 2022 instead of 1 January 2021. So this is what this slide is doing. It's just postponing the effective date so as to give certainty to taxpayers that those two proposals that were announced in the budget 2020 are not going to be done during the 2020 legislative cycle when we're dealing with the TLAB. And we are dealing with the TLAB now, which will be published for the public comment before the month end of July. And the TLAB will be including all the proposals that were included in the 2020 budget. The next slide is Chris.
Thanks, Yanga. This is on expanding access to living annuity funds. We had a lot of requests from individuals who were struggling with the start of the lockdown, and they were asking for additional flexibility and how they can access funds from their living annuity funds. We subsequently published regulations that a notice that increased the amount that individuals could take from those living annuity funds, and also change the date to be upfront. So normally with these, you can only change how much you get out of your living annuity funds in terms of the percentage once a year. We changed it so that you can make an immediate change, and also the amount could be increased up to 20% from 17.5%, or decreased down to 0.5% from 2.5%. So this would help individuals to either get additional access to their funds when they need it the most, or for those who saw the very large changes in the stock markets at the time, they didn't need to sell at a bottom in the market. This was going to be, it's a temporary measure for a limited period of 4 months up to the end of August, when it will revert back to the previous rules and regimes. There is also a change in the amount that you could take from a living annuity as a lump sum if it goes below a certain value. So previously, if the living annuity value dropped to below either 50,000 or 75,000, depending on the type of living annuity, you could then take the rest of the amount in cash. That amount has been increased to 125,000. So now if individuals have a living annuity and it drops below 125,000, they can take the remainder in cash. On the next slide, we talk about SARS has provided data to us on the initial take-up of all these measures in this presentation. It's up to the 25th of June, so there could still be further updates. But from what we've seen and from what SARS has seen so far, there were over 9,000 firms who used the deferral of pay as you earn that Frans spoke about in May, and then it dropped slightly to 7,000 in April, sorry, and then it dropped slightly to 7,000 in May, but there might still be other returns coming in. And the total relief was about 750 million. The skills development levy so far has provided relief of about 1.6 billion, the exemption in that regard. There have been some large excise duty and fuel levy deferrals up to the value of about 7.5 billion, which provides cash flow relief to those firms, but will ultimately be paid back. SARS said that there are about 255 applications on a case-by-case basis. 167 of those have been approved to the value of about 1 billion. 434 SMMEs took advantage of faster VAT returns so that they could get their refunds upfront and a bit quicker. So there is a large proportion that hasn't yet been taken into account. We're still working on trying to estimate the value of the employment tax incentive. And the provisional tax relief for corporates, the main payments are in June and in December. And we yet to have final figures on those values as they come in. So in terms of this, I mean, it was going for 4 months, so those numbers should really increase over the next couple of months as the data continues to flow in. Thank you.
So I think we're done, right, team?
Yes, thanks, ma'am.
Okay. Chair, so if I may just conclude, Honorable Chair and members, just 2 points. I think firstly, you've seen that these tax measures put in place almost immediately after the lockdown. And what we have is that, you know, as we said, even when we came to Parliament in April, that the aim was to maintain productive capacity in the economy, particularly of your small businesses, and also to ensure some sort of income of those who are employed. And I think the take-up figures are interesting that Chris has presented in the last slide. But these measures allowed us to act with speed. Members did mention at that point that, you know, the issue, Chair, is that on some tax measures, they become effective on announcement. And because the taxes are taken generally over a year, there's a lot of, in a sense, cash flow measures that are done upfront. Now that the bills are before Parliament, obviously the issue is not that we expect Parliament to pass what the executive has proposed, but to the extent that there are any changes to the bill made in Parliament, it obviously follows the amendments procedure laws. But what happens is that we can always take action, countervailing action, if any proposal is, for example, not accepted or amended. Then for the rest of the year, we either recover funds or do what we need to do to meet with the legislative requirements. The current law does allow us to have some steps for some measures in terms of announcements. So I just wanted to explain that because that was an issue that came up the last time. The second point, Chair, to make is that we are still living in great uncertainty. So some of the measures are 4 months, some of the measures are a bit longer. Should the COVID emergency continue, and I think as we look at issues, it's going beyond, I mean, we're sitting in July. It does seem that most of our provinces are only going to peak in August. That obviously this is something that we need to watch, and something I think when the committee processes the bills, if there are any updates in terms of any further announcements that are made, we have to just consider the dates in some instances. I'm just putting this out, Chair, just as something that we should just keep at the back of our mind. Thank you, Chair. I think with that, thank you to honourable members and Chair from the SARS and Treasury team.
Thanks, Comrade Momo and the team from Treasury and SARS for the presentation of the bills. I hope Mletsana is back. He is struggling with load shedding. There's load shedding that side of Velcom. Hopefully he will be back because select committees still have to vote on the report. I see here on the chart is Honorable Rider who want to speak first. Alan and Rulego, can you assist me with other members who would like to make comments? Members, that's the presentation on the bills. Can we make comments, clarity, seeking questions, and so on? Let me start with the Honorable Ryder.
Thank you very much, Chairperson. Didn't necessarily want to go first, but also not try to. Thank you for the opportunity. And at the outset, I'd like to say that I think Treasury's done a pretty good job considering how quickly they responded and the manner in which they've responded. So I think as a quick first response, this has been a good one and must be appreciated. The issue that I have is that, of course, this response came out when lockdown was going to be 21 days long. What we're finding now is that we're in day 100 and who hasn't lost count of lockdown, and many businesses are still not able to operate and not able to earn an income. Those that are back are often struggling with kind of the hangover effect of that first 21 days and then the extension and then the re-extension. So I think it's been agreed that most of these tax relief measures are mere deferments, and they give kind of 3 months, 4 months, etc., deferrals of liability, which is, as I said, is great. But many businesses are still not earning an income, and I'm thinking specifically of the tourism, the hospitality guys, the hairdressers that went back right at the end, and personal care industry. These people have taken serious strain and continue to take strain. We look now again at the liquor industry, and I note that you said that there were some proposals that had not been included in the legislation. One of those specifically related to the liquor manufacturing industry, who now again has received a second slap, as it were. So is there any kind of a move or proposal to extend some of these deferments? Will there be an automatic extension or further deferral, or will it be handled on a case-by-case basis? That's my first question. The second one relates to slide 25, where there were some numbers given of the number of firms that have taken advantage of these benefits that have been given. And to say 9,000 firms have taken advantage of the deferments is one thing. 9,000 out of the normal, how many is the question? You know, whenever my kids bring a mark home, Dad, I got 20 for spelling. Well, that's fantastic. Was it 20 out of 20 or 20 out of 100? So if you can just give us an idea of those numbers, perhaps we can get a better idea of the impact that these deferrals and benefits are having. Thank you.
Thank Dr. Honorable Ryder. I'll take Dr. George, Honorable Shibambu, Honorable Abraham. Who else who want to speak? Can you indicate through the chat box or through the WhatsApp group that we have? Dr. George, and then Treasury will come after all members will have made comments and asked questions. Over to you, Dr. George.
Thank you, Chairperson. Thanks very much for the presentation. I agree with Treasury absolutely that, you know, we don't know what's going to happen in the future, and it really is early days. It's really early days here, and it's going to probably endure for quite a while, these difficult times. On the living annuity, I want to know, I mean, there's only been relief for 4 months. I certainly don't think that that is enough. I understand that there's a comment that we would, evaluate it as time goes by, but I mean, we really almost are at August. What I'd like to know whether you considered bringing the minimum down to 0, because it is true that there are those individuals that don't necessarily need to make a withdrawal, especially if they inherited the money, etc. So why can it not be brought to 0, and why cannot that be extended for a longer period? Whether you've considered that. I know that there would be tax implications, obviously. Then, if you look at individual taxpayers, now we have provisions at the moment for people who work from home. You know what the provisions are. They're quite limited. Why, or has Treasury considered expanding the relief? I'm sure there won't be a lot of it, but at least it would go some way to alleviate the pressure that taxpayers are feeling. So, for example, is it not possible for Treasury to look at the rules around claiming for a home office and relaxing them to an extent, because people have been forced to work from home? So the fact is they can't actually go to work, but they are working from home, and various categories of taxpayers or other people would be able to access some kind of tax relief for working from home, but your call it your average salaried employee cannot do that. And I can't see any reason why not. So has Treasury considered doing some kind of relaxation on home offices, given the lockdown? And then also for individuals who receive a portion of their salary in car allowances or traveling allowances, they're unable to travel at the moment. So they're not going to be able to claim relief, which means that they're going to almost have an additional tax burden at the end of the financial or the tax year, which certainly will not be a good thing for them. So whether you've considered amending slightly the formula to bear in mind that people actually cannot travel because they cannot work at the moment. Thank you.
Thank you, Dr. George. Honorable Shibambo.
No, thanks, Chair. I had thought that we, as the committee, would independently seek legal guidance, or want to seek legal guidance in relation to
Hello, Honorable. Hello. Can we see? The media will want to see the visuals, and we also have a YouTube running.
No, my video is not working today. I tried to do that earlier. It's not working.
Oh.
So yeah. Now then, I was saying, Chair, that we need to look into the permissibility of this thing of passing, of just announcing laws from the executive and then they take effect immediately, and then Parliament just becomes a rubber stamp. It's uncomfortable. It's not sustainable, because we're just being governed by decrees, and that is not how the constitutional democracy is designed to be. So I need to get a proper legal briefing that deals with that, because it might have been a tradition, and most definitely a wrong tradition, where serious laws are made which have got huge implications on people's lives and everything else. And they are just made without a consultative process that involves Parliament, and only later Parliament is asked to endorse, and with very little space to could have a different perspective. So that is the only issue that I want to raise. Otherwise, we're not going to agree with anything that has been said there on that basis. Thank you.
Thanks, Honorable Shibambo. Honorable Abraham Noxie.
Okay, Chair, thank you. I'm here, Chair. Okay, Chairperson, I wish to appreciate the briefing that you have had from National Treasury. My first take, Chair, is around what Momo has raised with regards to a briefing that will be held in Parliament when Parliament reconvenes. My take on that, Chair, is that we refer to the current situation as the new normal. And therefore, I do not know what it is that we cannot deal with now. Unless Mr. Momo can explain to the committee as to why the briefing can wait until Parliament reconvenes. Because I'm afraid by that time, things would have gone under the bridge. Secondly, Chair, I'm on the issue of the Solidarity Fund and would therefore like to find out if the National Treasury can just briefly tell us clearly that this is where the Solidarity Fund is placed and these are the bills that are dealing with it. Just in one short sentence of clarity. The third one for me, Chair, is related to, I think, what Honorable George raised in terms of a special consideration on tax, in fact, on interest for those companies making much less than 1 million per annum. Whether we are treating them in the same way as bigger companies in terms of tax, and whether the postponement of the date also means that the interest does not or does remain the same. Those are my 2 cents questions, Chair. Thank you so much.
Thanks, Honorable Abraham. Is there any other member who will want to make a comment or ask a question before I request Treasurer and SARS to respond?
Yes, Chair. I had Mr. Ryder wanting to ask a question.
A second bite. Okay. Honorable Ryder.
Thank you, Chair. Yes, I rushed through for time, Chair, and I appreciate the gap for a second question. There was a strong point made that the relief measures that are being offered are being made for tax-compliant businesses. And I was just trying to establish, is this a government-wide principle that is being applied? And I asked with specific reference, of course, to the taxi industry, which is notorious for being non-tax compliant, and the benefits that are being offered to them through the Transport Department. Perhaps you can get a comment on that. Thank you, Chair.
Thanks, Honorable Ryder and other honorable members who have asked questions and made comments. Treasury and SARS, can you respond to issues raised by honorable members?
Thank you, Chair. I'll start and the rest of the team will come in to answer the harder questions. I'll deal with the simpler questions. Chair, I think just to start with Honorable Abrams, I think we're not asking for any delay in the process. I think we're just saying that normally what happens is when these are draft bills and the public hearings are held at that point. In this instance, what's happened is Parliament is having the hearings after the bills have been tabled, and I've seen that you've already published notices for the hearing, for submissions, and so on. So at some point, the committees, and I think we're running these as joint hearings, if I'm not mistaken, but whether they joint or not, the issue, I think, is that you will have hearings and then the department will come back to respond. So just when you run your normal processes, I'm just anticipating that this will be sometime in August. And obviously, just when you look at the developments with COVID, that there's a lot of uncertainty. And so to answer the questions on whether there's some tweaking or date extensions. I'm pretty certain that obviously we'll know much better as we run into peak in most other provinces. Perhaps the Western Cape has already run into its peak, but I think for other provinces, they're going to run into their peak later, as we saw from what the president also said in his announcement a few days ago. So to the extent that we have to update for those in matters that we raise in this bill, we can then update during the hearings and our response and our response to the hearings. I think, Chair, in terms of further proposals, this bill only deals with the specific measures that were announced in the two earlier announcements. It doesn't cover, I think, other issues like Honorable George has raised on deductions from home or interest issues. But let the rest of the team come in, and if there are still any matters not answered, I'll come back. So I don't know, Yanga, Chris, Franz, if you can just answer the specific issues, I think, starting with Honorable Ryder's points. And sorry, Chair, just the last point, I think with Honorable Shivambu's point, I think that is obviously a matter for Parliament to take up, so I won't comment on it. It will be, I guess, it's the approach that we take legally. I think we have had an approach that we found was legally consistent in the past, but that is obviously your prerogative as Parliament to review any of the past approaches to the way we deal with tax legislation and what comes into effect. Bear in mind, Chair, that on those things, like when the minister announces, for example, any changes in rates on personal income tax, they tend to come into effect immediately in March, as the one example that's always there. Some of the other announcements on excise duties and so on take effect on announcement. So there's a range of these measures, but we can engage with Parliament if you so wish to look at to review this legally. Thank you, Chair.
Okay, thank you, Chair. I think on what Momo is saying and on the issue raised by Floyd, currently the tax legislation, as Momo have said, there is a practice and also there is a code in the tax legislation that says, that allows the minister to make an announcement in the budget, and the announcement will apply for a period of 12 months up until Parliament passes the legislation. That is in the law. And that said, at the same time, we've got a court case of the Piane Brothers Ltd. It was a North Gauteng High Court, whereby it was agreed that it is international practice for countries to accept that retrospective amendments may be appropriate where a retrospective provision corrects an unintended consequence, addresses tax avoidance, or might otherwise lead to a significant behavioral change that will create undesirable consequences. So I think we've got the court case that has been decided in South Africa regarding the retrospective application. Yes, we understand these were these are the periods of the Disaster Management Act, and we didn't know that we're gonna be in this situation. But that said, there is a court case, firstly, and secondly, we've got provisions in the legislation that allows the minister to make an announcement and effective from the date of announcement, subject to Parliament passing the legislation within the period of 12 months. So we've got those measures, but as Momo have said, we give Parliament the leeway to do the legal analysis. Also, maybe that will also assist us to check if we are doing things correctly. And another thing, there was a question by Honorable Abrahams regarding the Solidarity Fund. The Solidarity Fund is a fund that is established in terms of the Companies Intellectual Property Commission, and it is a non-profit company, registration number 2020/17956/08. So those are the things that I can provide. Maybe my colleagues will answer, maybe Chris answer on the issue of numbers and others. Thank you.
Thank you, Yanga. I'll try and go through some of the questions as I can. Honorable Ryder asked about the number of people. How does the 9,000 fit in relation to the other companies? Well, there are around 180,000 companies who pay corporate income tax. You have positive taxable income. So I suppose that's one measure we can look at. I think in terms of this take up with the deferral of pay as you earn, I mean, it really is open to all of them. So it's depending on their particular position, whether they want to go through with this submissions and with actually paying that lower amount. You know, companies who are doing well through the period might say, actually, we don't need what is in effect an interest-free loan to get through this. So they might not have taken it up, but it is open to all. There was I think Honorable George asked about considering, why isn't the living annuity value gone down to zero? I think from our perspective, the one thing that worries us a little bit is these living annuities are exempt from estate duty. So if you bring the value down to zero, they then become a vehicle for individuals to put money in, to then grow and then pass on to their beneficiaries fully exempt from estate duty. And having the small value of initial payout at least makes the case clear that this really is for retirement and it's not meant as an estate duty avoidance vehicle. France may be able to provide some more input on being able to claim for around the home office, but there are specific rules there. And the one major rule is that more than 50% of your time is spent working from home. So if during this lockdown, and then I don't know how long it will last, but afterwards those individuals who are working from home do go past that 50%, then they would qualify. So we do have rules there, and then they would be catered for in the particular circumstances. Is there any special consideration, Honourable Abraham, for those firms that are less than $1 million? We do have two regimes to try and help smaller firms, the turnover tax regime and the small business corporation regime, which can help smaller firms so that they can either pay lower tax or a much simplified version of tax. And you did ask about the interest on those. Is there interest on these deferrals, and is everybody paying the same? So on all these deferrals, they're all interest-free. So in effect, what government is doing by giving a deferral on tax but not charging interest on them is we're in effect giving an interest-free loan to all these businesses. So we're saying you can take this amount that you don't have to pay immediately, and then you only have to pay later. For the provisional tax side, it could be up to a year later, just to give you the cash flow upfront to help you continue, and there wouldn't be any interest or penalties on those amounts. France, I don't know if you'd like to add on that.
Thanks, Chris. Just on the question of home offices, I must admit there's a certain philosophical issue here as well, because to the extent that a deduction is permitted, and that is not something that is being reimbursed by the employer, you're essentially shifting part of the cost of employment to the employee. And that, as you will recall, one of the issues with car allowances and company cars, so to speak, which became part of the problem, is that they become part of your package as a salary earner. Essentially, what has happened is the employer has shifted some of the business expenditure off their books into your personal expenses. So that's a broader issue that you do have to consider before you start permitting deductions here. But putting that to one side, the rules are fairly strict for home offices because of the abuses which we ran into some years ago. But I would say that if an employer, for example, were to reimburse part of the expenditure, say on internet connection, something of that nature, and that is directly attributable to working from home, that would not be taxable. That's a reimbursable allowance. So there are avenues for employees to get relief. Once you start moving into the space of home offices, you do start getting into interesting problems around what is the capital gains treatment then when you sell your home, because part of the home is now being used for business purposes. So it may sound like a simple thing to start with, but there are some complexities here that you need to consider before you go down this road. I can't speak for Treasury as to whether they would like to go down this road or not, but just to highlight that there are some complexities here. I just see if there was anything else that is to my address. I think the Pienaar Brothers case has been covered already with respect to retrospective legislation. I think the interesting part of that case, though, is that part of the challenge was that Parliament did not, in fact, go with the remedy that the minister had announced on Budget Day. And this was one of the points that was raised by the taxpayer in that case, that in fact, something different had been done by Parliament as to what had been announced originally. And in fact, that they had been prejudiced by the fact that the Parliament hadn't just rubber stamped what the minister had done. And the court, and with respectfully, I think, correctly came to the conclusion that to try and limit Parliament in that fashion would be antithetical to the whole point of a parliamentary democracy. And so the court had no difficulty with the fact that Parliament had in fact addressed the issue in a different way from that which had been announced by the minister on Budget Day. But equally, the court had no difficulty with that solution being retrospective to the date of the announcement that the measure or a measure to deal with this particular issue would be put in place. So I think that's what I can contribute at this point. Oh, sorry, one more issue. Tax compliance. Yes, I can't speak to the transport measures as to the degree of tax compliance required there or not. I'm not familiar with them. But I do know that several of the initiatives that have been introduced by government, one that I am aware of in the small business space, do in fact require a linkage into being tax compliant. Clearly, from a revenue service perspective, we feel that that is appropriate, but there may be other policy considerations that other departments have, which would mean that it is not. But from our perspective, it's certainly helpful to encourage tax compliance through that measure.
Thank you, Chair. I think we've answered all the questions just from my list.
Okay. Madam Yangamputa, can you unshare your screen, please?
My computer is 6 years old. It's so old that it has got lines. I can't share. I can't do video on this computer, or else it will crash. Thanks.
So you are disclosing your age, younger. So that's what you are doing. So it means you are not far from going to pension.
I'm not far.
Okay, that's
She's younger than you and I promise you.
How are you? You'll start Honorable Momo younger, then I will follow. I will be the third. Okay, honorable members, those are the responses. I'm not sure if honorable members will want to make follow-up questions and comments. Alan and Kululeko, are there members who want to follow-up questions?
Nothing on my side, Chair.
There's nothing on the chat line and WhatsApp, Chair, so nothing at the moment.
Okay. If that's the case, let me explain the next process. What will happen from here, honorable members and Treasury and SARS? Next week, Wednesday, 22nd July, we'll have public hearings. Then on the 28th of July, Treasury and SARS will respond to public hearings. I mean, public submissions. On the Tuesday, the 4th of August, and Wednesday, the 5th of August, there will be committee deliberations and voting. As we have discussed previous week, that can we try as much as we can to encourage more stakeholders and individuals to come and make presentations when we do the public hearings. Honorable Shibambu, can you try as much as you can, as you have raised the matter of public hearings, that is like from one demographic. So hopefully next week, all of us whips, Honorable Njandu, Honorable Abraham, let's go all out and encourage the public to make submissions. This is a very important matter. Honorable Ryder raised the issue of the taxi industry. You can see they are up in arms and they've got a case to present. The taxi industry transport 68% of commuters in this country. So it's the biggest mode of transport industry. Of course, the issues that they are raising are genuine. Government is bailing out SAA and a whole range of other entities which are there, which we don't have issues about. But Treasury, together with the Department of Transport, can you look at the issue of taxi industry? It's not for us to prescribe how you want to go about it. We are public representatives. If a particular constituency raises a matter, we can't keep quiet. We have to take it up with the relevant ministries. And in this regard, the Ministry of Transport and Treasury are relevant. So look at that matter and see what can be done. Probably when you come back at the right time to come to the committee to present the economic recovery plan, you would be in the best position to go through industry per industry and explain that in this industry, this is what can be done. And can we appeal, Comrade Momo, that the issue of the economic recovery plan should be attended to as soon as possible. We are not prescribing as to when, but the conditions are getting worse. I was in Tshwane yesterday. My children are attending school there. It's very terrible. Pretoria is a shadow of itself. I've been that side of Hartfield, University of Pretoria. It's very bad. So the sooner we do something about the recovery plan, the better, because we don't want a stage where when the economy collapses, very to take it up. And if it goes down and it stays the same, it takes the L shape. That's going to be very terrible. But if it goes down and then it takes the V shape, that's what we'll appreciate. But from the look of things, it looks like for the economy to take the V shape will take quite a longer time. It looks like we'll stay at the L shape for quite some time. So I'm appealing to Treasury as a lead department when it comes to economic policy, that look at the economic recovery plan comprehensively and engage the public, engage the private sector, because it's a matter of national interest, and come back to Parliament and report. When you come back to report, Comrade Momo, we'll want to see the plan, but it must have timelines. Gone are the days when we are just given an economic policy document the department with its entities should come with clear plan and the timelines that this is what we are going to do at the right time. Unless, honorable members, we don't go around, the situation is getting bad and bad. The other time I was here in Polokwane, I was with some young people. I find out there are 3 saloons have been closed, and they were very, very worried. Shops are closing, businesses are closing daily. It's something that we see with our naked eyes. So the situation that we're heading to, surely it will be unbearable in the next 2 months unless something is done in that regard. Over to you, Honorable Karim. I hope Honorable Mkiva and Honorable Mletsani are back and are connected.
Yeah, no, one of them is, I think we have a quorum, thanks. Obviously, the NA members, we give you permission to leave, Comrade Koche. You have our permission. Okay. So,
Why are you chasing us away? Why are you chasing us away?
Well, but don't expect the same from us. We are busy people. Okay, very quick.
Yeah, we also release.
Colleagues from the NA.
Release.
Yes, of course. Let's move on to the NCOP Select Committee now. And in Kulileko, where are we? I believe that Mr. Moletsane is unavailable. I would suggest, unless people have a problem.
I'm here, Chair.
Oh, you're here. Okay, good. All right. And then Zolani Mkiva has been traced, right? He's been reconnected or connected. Is that right, Zolani? Are you there?
Yeah, I am here. I've not been traced, but I'm connected.
Okay. Mama Rakhane was in another meeting in transport. Is she back?
She is back, Chair.
Good. Okay. All right. Good. So where we are. So the report is the same as the one on the Standing Committee's report, except that we use the word Select Committee, and now and then we remove quarterly briefings because we don't have those. The NA does, but we'll join them under COVID circumstances. Over then to a mover and a seconder, please. Okay, shall we postpone it then? No mover.
Thank you, Chair. Njadu.
Oh, okay. Thank you, yes.
Yeah, Chair, the report was very clear and very practical. And on the ANC, on the Select Committee, I'm proposing that we adopt the report. Thank you very much, Chair.
Okay. On condition that you have a private meeting with the DA people and the Freedom Front Plus and the EFF and knock some sense into their heads, so to speak. It's a metaphorical term, not a physical one, please, right? Secondly, it was a joke, Mr. Fani Jutoy. It was a joke. You can smile at least. Okay, so next, is it regarded as against the principles of the Freedom Front to smile, even? Is it in your constitution? No person shall smile until the Freedom Front takes over South Africa. Is that the point, Funny? Okay, over then to seconder.
The point of order is that you are actually running this meeting as a joke by postponing the voting, since you cannot, you doesn't seem to be able to control your members to take part when meetings are supposed to take place. So, yes.
Funny. Now, you're directing the issue to the wrong person. I am an independent, impartial chair of the institution, as you sometimes remind me. You must speak to Mr. Njadu. Mr. Njadu, Mr. Fani Jutoy is attacking you for failing to deliver as the whip. You and Mama Rakhane. Okay, fine. You can speak Fani offline. Okay. In Kulileko, give Fani a rule book, please. Organize a
Chairperson, point of order.
Yeah, what's the point?
Can I just consult one of my dictionaries, and I just want to get a decent description of what impartial and independent means, because clearly we have different impressions.
No clapping there, I can hear you, Willie. Okay, over to a seconder. My God, it's tough to chair these meetings. The ANC's got an identity crisis. It cannot know whether it supports. Certainly doesn't know whether it's second this report.
I do support.
Clearly we are very honored, Chairperson. Okay, good. I take it the DA, on behalf of the DA, as the self-appointed spokesperson, they reserve their right. On behalf of Mr. Moletsane, they vigorously oppose, vigorously and on principle and emphatically and indefatigably oppose this report. Is that right, Comrade Moletsane?
You are correct, Chairperson.
Correct, good. Okay, you can give me honorary membership of the EFF if ever I wanted it. Not that I will. Okay, over to Fani as his spokesperson. The Freedom Front Plus cannot, absolutely cannot support this report. Is that correct, Fani?
I'm reserving my position. Chair. Thank you.
Sorry? What's that?
I'm reserving my position, Chair. Thank you.
Oh, it's more sophisticated. Okay, you're reserving your. All right. I take that to mean in simple language you're opposing it. Otherwise, you'll have to step down, Fani. You might get expelled from your party. Remember, there's another party that's taking on some of its members. Okay, thanks all
luckily,
for
your... my position is not in danger. We do not have infighting like the ANC and factional dividences in our party. Thank you.
Only 2 members in the whole of the country. It's very hard to have faction fights, especially when you can't connect with each other. Okay, thank you very much. We will discuss the matter further with Fani. Thank you all. This is a delightful meeting. We're not going to have a debate on this. So Dennis, don't ask me what are we doing here. Please raise it with the powers that be. I have indeed tried, and I've got nowhere. Thank you, Dennis. We've given you a task. Keep well. See you next week, or not tomorrow. Is that right, Dikeledi? We end on a meeting tomorrow, later this week. Thank you very much. Keep well. Bye then.
Before you close, Chairperson.
Can I propose close, but Comrade?
No, because you came so late. No, because the rules are clear. Zolani, you came 1 hour, 15 minutes late. We're closing the meeting, but you have to stay there. You have to stay there for 1 hour, 15 minutes. Right? It's going to let go. Yeah. Never mind, you're a traditional leader. We're all the equal here, only in Parliament. Okay, outside we are you here to us. Yeah, I'm sorry to say it's a democracy. Okay, what's it, Dikeledi? Do you have to speak? Remember, I'm chairing this meeting. It's not yours. Yes, what? Yeah.
Must fasten our seatbelt now. I just want to say to all the committee members that they must, I request that they speak to their chairpersons at the legislatures, different legislatures, in as far as the mandates are concerned, because we have to deal with the consolidation of mandate on Friday. So sometimes it disorganizes us because they will have meetings in the morning of Friday.
Yes.
Yes. So I'm requesting that you please talk to them, that they consider that. We have written letters, and Advocate Pindela have also spoken to the secretaries.
Oh, very good. And I think Chair, Lubabalo and Estelle should do the same, as should each of our provincial coordinators, KZN, etc., because they also have that role. Yeah, yeah. Okay, good. Thanks very much, useful chairperson. Okay, thank you indeed. Keep well.
Bye-bye, Fani, Weebly. Jy's op mute, Fani, ek hoor jou nie.